Hello, everyone. Dave Landry here. Welcome back to Trading Simplified. Wow, 12 shows. I can't believe it. It's really flying by. So, what we're going to talk about? Well, I want to talk about not confusing the issue with facts and just be a trend following moron. And it took me many years to reach this point. But believe me, once you do, your life is going to get a lot easier. That's going to make a lot of sense. And this is based on an email I received a few months back, but it's just as relevant or even more relevant today, I should say. We have a couple of mystery charts revealed. No new mystery charts for next week. I'm actually out of setups. Also, no shows the next couple of weeks. And check the schedule at StockCharts for more on that too. We have a new feature. I've been talking with my producer Rachel, and we would kind of brainstorm some ideas together. And one of them I thought would be pretty cool to show the miss, the best, or the worst trade of the week. And not every week we'll have an example, but this week we have all three. And we're going to get through as many of those as possible towards the end of the show. And if we don't get to them all, don't worry, we'll get to them in the next show. And just FYI, housekeeping, I do take requests. That makes my job a lot easier. If I know what you want to hear, I could certainly tailor the show for you. So feel free to send in requests. And we're going to add some more features, I think, early next year. We're probably going to get together and brainstorm a little bit over the next few weeks on what we could do better and what features you guys want to see. So just let us know. If you want some follow-up information, I tend to throw a lot of information out at once, but there's plenty of follow-up information. I'll give you all three of my books, a couple of free courses, and many other, and a lot of other stuff. Just go to davelandry.com/stockcharts for more on that. If you have to reach me, davelandry.com/contact. If you're watching the show live, give me 3 or 4 hours to get the slides put in, but I'll have those in by tomorrow, December 19th for sure. All right, let's get through the mystery charts real quick. First mystery chart from last week, easy for me to say, is net. Now, this was in my trading service with an entry at 1935 and a stop at 16. And that's what that looks like in the chart. It's kind of a cup and handle looking pattern, pullback pattern, also an IPO. A lot of things that I like about it. And then our initial profit target up at 26.50. And let's look at what happened. Nothing. It came really close yesterday, triggering, but then it came back in. So I decided that I was going to take it off of my watch list, and I'm no longer looking to trade. In other words, no more orders on this one, and that's fine. Not putting capital in the harm's way is a big part of trading, and I think it's not emphasized enough, and I certainly will touch upon that in many of the upcoming shows. So no trigger, no trade. I just shout next in a case like this. Now, here's our second mystery chart, which I did take trades in, and it is ping. And I like this stock because it was a nice, sharp uptrend followed by a pullback, a relatively new issue, what I would consider still an IPO. And you can see down in the spreadsheet below, we had an entry of 22.25, a protective stop of 18, which gives us initial profit target of 26.50. Remember, you could be wrong on any trade. Nobody knows exactly what a market will do. Not you, not me, and certainly not the guy who screams on TV, as I often preach. So here was a trigger just yesterday, or day before, I should say. And so far, so good, knock on wood on that one. And again, we have a stop in place just in case we are wrong. Now, that stop looks like it's a long ways away, but it's a fairly volatile stock, so that's what it called for. And just an FYI, one thing, I read a book recently called Dalio's Principles, and he's a multi-billion-dollar hedge fund manager. And one of the things he talks about is radical transparency. And what I'm going to start doing as much as possible until and unless it begins to hurt my trading or anything else for that matter, I'm going to start being more and more open. And years ago, my father was signing up for a credit card. It was something that I was involved with. I forget why or exactly what it was. But when it came to income, he put down $30,000. And I looked at him and he looked back to me and he grinned. He says, Dave, you just want to put enough in there so they could see that you are worthy of the credit. So what I decided to do is I have an account that's right around 100K, and I want to have it match the model account, so to speak, as much as possible. So I will be showing trades, live trades, more and more. So anyway, based on that, about 600 shares in this particular case. You'll notice down in the spreadsheet, it was 471. Usually I round up, and in this case, this account, a little bit more than 100K. So it called for about 600 shares. So anyway, I want to start sharing more and more trades, actual trades with you, just to show you that this drawing of lines and trends and all this other simple stuff, this trading simplified, can actually work. Not all the time, not as great as it has lately all the time, but it can work very well. Now, one of the things, it's kind of my ongoing mission, is seeking and accepting the truth of the markets. And what is, and this email kind of dovetails nicely into that. Hey, Dave, I've been in the market since the 80s, traded the dot-com boom well, and this market has me thinking I am crazy. It's a March session. Can you talk about what is supporting this market, or am I just too old for this? I know, stop thinking you just follow price, I guess. Well, my work is done. Let me just drop the mic and get out of here. Oops, I knocked my mic over. Son of a gun. We'll edit that out. Okay, so it's hard for me to hold overnight, but with the endless buyouts based on cheap debt and tax cuts, I guess go with the flow. But I can't help but think we are borrowing on the future. How do I stay in the game? Well, lots to address here. But the first thing I would tell Susan is don't confuse the issue with facts. And as soon as you learn how not to confuse the issue with facts, your life gets a lot easier when it comes to markets. Years ago, I was part of one of the first websites out there regarding as far as trading is concerned. It was started in the mid to late 90s. And then in the mid 90s, in my column, when the market was going up, when the big blue arrow was pointing higher, I would draw these arrows on the charts, recommend these stocks, and they were doing quite well. Well, it was not that I was the grand poobah, it was just that the market conditions were really good, and I was smart enough to just follow along. And right about that time, a famous trader said he was amazed. He's never seen anything or anyone with such a canny ability, easy for me to say, to predict markets. Well, the reality was, I wasn't doing anything earth-shattering. I was just following along like a good little trend follower. Well, he was so enthralled with me that he's like, I must meet you. So we ended up meeting in New York City, and we talked until like 4 a.m. in the morning. And he was even talking about giving me $4 or $5 million to start with, and seed money, so to speak. And it was just a meeting involved with wild enthusiasm. It's a bit of a pinch me moment. There's a lot more to this story. That's a bit of a 2-drink minimum, but I'll give you the thumbnail of it. What happened soon thereafter, though, for some strange reason, was he began emailing me saying, this market is too high, and I'm shorting this one particular market, and I'm adding to it on shorts. And that was right around here while that big blue arrow was still going higher. And then he kept on shorting as the market got higher and higher. Now, I'm not positive it was him, but the emails ceased right around this time, and they took a turn for the worse, and they got really nasty. And then he sent me an email, which I assume it's him, because when I called him on it, the emails ceased. He said, "You're nothing but a trend-following moron and will die penniless." Now, here's a guy that I had the utmost respect for, and actually had a framed picture of one of his allegories in my office, and that's how much I love this guy, and that's before I met him. And I was really hurt. But then I realized that when I fought trends, I lost money. And when I followed trends, I made money. Now, I'm not penniless. I'm not dead yet, like the little character in Monty Python. Now, getting back to Susan's email, she's not too old. The older I get, the less sense the markets make. And I think that that's one of those epiphanies you come to, and it's a weird thing to work so hard and so long and understand markets less and less. In any other field, medicine or accounting or whatever, you just get better and better and better at understanding what's really going on. But in trading, the longer I've been at this, the more I realize that I, number one, have no control over the markets, and number two, they make absolutely no sense. And the more I realize that I am nothing but a trend following moron, and there's nothing wrong with that. I even had t-shirts and buttons made that say just that. Now, she traded the dot-com bubble, so she knows not to confuse the issue with facts. And kind of an interesting chart that I put up a while back. This is the NASDAQ composite. And in the back, I don't want to be Schadenfreude, but and that's why I'm not showing you the name of the fund, but it's a fund that you've all heard of. And notice that the NASDAQ went up and had this stupid rally. My wife used to have a business associate, and she had two teenage sons. And usually every Monday morning, she'd come in and she would talk about what they did that was ludicrous over the weekend, the trouble they got into, or how they hurt themselves or whatever. And then she would pause at the end of the story and say, stupid. And she's actually was on recently reality TV. We were hoping to see her say the word stupid, or stupid. But the NASDAQ had this stupid rally. It went up like 200%. And during the same time, this fund manager was out there saying, this rally makes no sense. There's no fundamentals, blah, blah, blah. And he lost 50%, or his fund lost 50% of its value. And being in the business like I am, I consider 50% a blow up. I've worked with hedge funds, and when they hit a 50% drawdown, they're out of business and I'm out of a job. So for all intents and purposes, that is a blow up. However, for some reason, this gentleman is given a pass, and I don't know why, but that's another one of those 2-drink minimum stories. Now, speaking of the dot-com bubble, one of the things that I found really interesting back then was there was this popular fundamental and technical analysis combo methodology. They had to scramble to readjust because there were no fundamentals in the market. So that's just kind of something interesting to throw out, where they tried to readjust, the other gentleman did not. But even the scary part here is that they're changing their system on the fly. But that's kind of a little bit of a digress. I digress a little bit getting to that. Now, speaking of logic, let's look at some of the logic behind some of my trades. This one's from a little while back, and I have some more current examples, but I thought this was kind of interesting. This was an IPO that I bought here, and it has a negative $43 million in net income. But look at what the stock did. But Dave, didn't it go down a whole bunch afterwards? Yeah, but through proper money management and position management, as I'll show you, you can make a lot of money on a trade like that. In fact, in this case, it rallied over 70% from the entry. Now, KOD is our most recent example. And I know I'm probably going to beat this one to death, but you can see that was a nice little setup in here, nice little TKO that we talked about in recent shows. We had an entry here at 29.5. And if you look at their balance sheet, they have a negative $46 million in net income. Well, what did the stock do? Well, it pretty much doubles overnight, or doubles and change overnight. And these are the actual trades. And you can see that I was getting in at 29.50. And these are some model accounts that I run. I say model because they're right around the same size as the model portfolio, which is right here on your screen. Now, speaking of the model portfolio, I went in and looked at the net income on these companies, and this is a little gold company. They are making money. Take a look at this one here, though, TSCO. This is one we're short. They're making about $500 million when it comes to net income. But that's just the opposite of what you would want for a short, because you want the stock to go down. This stock is making money, but it's also a short, so it's just the opposite. Again, logic does not apply. Now, here's one that's going up that's making money, so that kind of doesn't work as far as the argument is concerned, this one too. But look at the rest of these. T&K, a stock we're long, net income of $10 million. KOD, the best looking stock in our portfolio right now, has a negative $46 million net income, and the Ping has minus $6 million, which looks like it's having a pretty good rally today, knock on wood. And then the one we were looking to get long, and it didn't trigger, but we were looking nonetheless, has a $94 million net income. Now, getting back to the TIGR trade, just to show you how things worked out, those were the actual trades, and you'll get the slides, like I said, a few hours after slow if you're looking for them. And this is what we did. As a trader, we are looking to get in, take partial profits, and trail a stop higher. Now, as far as markets acting illogical, I put up this post on Facebook when we were in the greatest Bitcoin rally, hopefully not ever, but what we've seen so far. You can make a lot of money riding a bubble, provided that you don't invest your life savings, take some profits along the way, as I just showed you, okay, and have a chair ready for when the music stops. Again, as I just showed you, and it will, by the way. Or you can pontificate while the bubble goes up 10,000% or more, has a 10% or much more correction, and then say, see, I told you. It's not easy being a trend following moron, but looking smart and making money are two different things. And you might want to write that down. So, in Crypto Week a couple of weeks ago, we talked about this particular trade or these particular trades. You could see that there was a buy, a stop, an initial profit target, and we trailed the stop higher. Now, what's interesting is I did put that post out, and it was fairly close to the top of the bubble, but it wasn't quite the top just yet. And I remember doing an add-on trade at 16,000 and a half on Bitcoin. And I remember questioning my sanity, like, wait a minute, this is just ludicrous. Even ludicrous would say this is ludicrous, buying into Bitcoin at such high levels. But we had a nice little rally out of that. We went up towards 200, up toward 2,000 before the market corrected back and I got stopped out of the remainder. Now, had I pontificated my brilliance down around $4,000, where I originally started buying, going way back on this chart, I would have missed this entire bubble. And this was a fantastic bubble, as good as what we saw in the late 90s in the NASDAQ. And then, of course, stopped out in the remainder. One of the most interesting things when it comes to trading is when I go to work with someone, I'm always like, geez, how am I going to figure out what they're doing wrong? And sometimes I'll just say, well, what are you doing wrong? And 9 out of 10 times they'll tell me. And that's the good part of, that's another one of those work is done. I'm not going to drop my mic again. I don't want to break it. Hopefully it's still working. But you know that you know. It is a lot of times I'll say, what are you doing wrong? And they'll tell me. And if they don't, I figure it out and they'll say, I know. And so what did Susan say? She says, I know, stop thinking and just follow price, I guess. So that's another one of those drop the mic moments. Easier said than done. If you seek truth in the market, the truth, the light in the way is price. Focus on price and just price, and you're going to make money. If you add in all this other extraneous information, you're going to confuse the issue with facts. And your life's going to get a lot more difficult. By the way, if you think about it, all you have to do in trading is capture a price move. I know, easier said than done. But what is that price move? That price move is a trend. You have to capture a trend on any trade to make money. Now, if you ever find yourself fighting trends or confusing the issue with facts, then you need to do what I do, is just put the instructions on your arm. Now, in my live, when I do a live presentation, I offer to pay for anyone's tattoos. So far, we haven't had any takers, but I do have some temporary tattoos on order that I will give out. Maybe if you send me a self-addressed stamped envelope, I'll get you one, and I'll work to get to that address. Susan went on to say, can you talk about what is supporting this market? Well, let's think about it. There's only 3 states in which a market can exist. It's either going up, which means there's demand. It's either going down, which means there's supply, or it's either going sideways, which means equilibrium. Supply equals demand. So why is it going up? I have no idea, okay? The only answer I can give you is the fact that there is demand for stocks right now. So you need to always ask yourself, which is it? Unless you're Bill Clinton, what is. And it may not be what you want it to be, and often it won't be, but what is. So again, seek truth and seek that truth in price. Hard for me to hold overnight, but with endless buyouts based on cheap debt and tax cuts, I guess go with the flow. But I can't help but think we are borrowing on the future. Well, I used to have these coworkers, and they would always quote Ed McMahon. I think they were quoting Phil Hartman, quoting Ed McMahon, because I don't know if they were old enough to know the Tonight Show. But yes, you're correct. Right, you are. He would sit next to Johnny Carson and say that. So yeah, you're correct. Right, you are. And this market has me thinking I'm crazy. Well, you're not crazy. Okay. This is where you come back to somebody like Keynes, who says that markets can stay irrational a lot longer than you could say stay solvent. Like the little guy who called me a trend following moron. I actually have more. Rachel won't let me call him what I want to call him, but he lost a fortune, and he may have blown up. He seems to have disappeared off the face of the earth. So I don't know what happened to him, but many of fortunes have been lost by being right but early. So I think Susan is 100% right, but I think she's a little bit early. Hard for me to hold overnight. Well, the problem with that is that's where the money is. Markets can only move so far in a limited amount of time. Doesn't mean that I don't occasionally take a day trade, although that's not my bread and butter and not what I focus on. I focus on the trend trades because, as you can see right here, and again, I told you I'd beat the dead horse on this one, you can occasionally capture a really nice move over a short period of time, and especially over a much longer period of time. So that's where the money is, the longer term trading. So in summary, Susan, you're not crazy, markets are. And what is, you have to accept it and profit from it. Okay, let's shift gears and get to the best, or the worst trade of the week. And this week, we have all three. Let's take a look at the worst first. So I am long this stock and long some options. And again, this is a model account with about 100K in it or so. And I decided to be cute and on an intraday bow tie, sell short. And I was thinking, you know what? I've got some calls at 65, so I'm gonna short against those calls, make a little money intraday, and then that'll help pay for those calls, right? Well, within a few minutes, or at least within an hour or so, I was up about $500 on just 200 shares and just this one account. And I figured that, that's really good money, really quick. I don't want to be fighting a trend anyway, even though the intraday trend is down. I'm fighting that longer term trend. Let me check my arm. Wait a minute, Dave. You say you're a trend following moron. But instead of taking that $500 on a counter trend trade, I decided to hold overnight. After all, I am long the calls, right? Well, eventually I was forced out and lost nearly $2,000. Now I made back a little bit on the calls, but what I did was I was forced to exit those calls, okay? And that forced me out of that part of my position, that part of my trend following moron position. So this was a stupid trade, and I'm continuing to beat myself up on this. By the way, you're going to find, and I noticed that Dave Keller was talking about this recently in one of his shows, but you're going to find that the better traders, not that I'm a better trader, but the better traders tend to talk about what they could have done better as opposed to brag on their positions. And it kind of dovetails in with what Annie Duke says. The poker players at the bar who are really great poker players and consistent and longer term great poker players, what they do is you'll find them analyzing, even if they won the game, they'll talk about what they could have done so much better in the hands. And I think that's when the true enlightenment comes in trading, is when you're really analyzing your trades and what you could have done better. Even on great days, I wouldn't say beating myself up, but I'm always looking really hard to what could I have done better in this particular case. So the shame in this trade, or shame, is that I held the day trade overnight, but I was hedged. Well, the problem with that is that kind of had me playing both ends against the middle. And I immediately had a gift horse profit. And that's what I was looking for. I was just looking to kind of get a little scalp out of this, just kind of an S&G type of trade. And it ended up costing me $2,000 per account. And I had zero planning in this. Now, what do I always preach? Plan the trade and trade the plan. Your life gets a lot easier once you begin to do that. And as I alluded to a second ago, I was trying to get a little too cute. I was shorting against calls to pay for the calls. And that's kind of like playing both sides against the middle. It's like I wanted the stock to go down first, but then I wanted to go up a bunch. Well, it's hard to get a stock just to go in one direction, let alone two. And the problem with doing this is it puts you into a state of regret. And that's a very dangerous place to be. And I've done complete presentations just on that. And then it also kind of screwed up my directional play from 65 to 75. So now the stock is traded well above the strike of 65, but I've got knocked out of those calls because I had to take them off. Now, the reason I want to show you my errors is one, so I can beat myself up a little bit and learn from a selfish standpoint, but also because I think that you can learn from them. And I have a book called Distilled Wisdom here, which I really like. Every now and then I'll just grab it and flip to a page or two. I'll keep it on a bookshelf near my desk. And a lot of times I just keep it on my desk. But last night I was showing my wife a quote, totally unrelated to all this. And I came across this one: from the errors of others, a wise man corrects his own. And I like this one here: learn from the mistakes of others. You can't live long enough to make them all yourselves. My oldest daughter, I shouldn't throw her under the bus, but she believes that experience is the best teacher, and she's not willing to learn from other people's experience. Now, my youngest, she sees one of her friends effed up. She'll F up. She'll come home and tell us about it and say, I'm definitely not going to do that. So the point is, try to learn from other people's mistakes. Let's take a look at the best trade of the week. Not that I printed money on this one, but this was an opening gap reversal. And just want to show you that I did point this out ahead of time in my Facebook group. And this is my, what I call my Landry list. You'll notice that there are some mystery charts that are here, some prior mystery charts, I should say. And what I was looking to do was play an opening gap reversal in the direction of the trend. So the stock is in a very nice pullback. It's set up for a longer term play. It gaps lower and then reverses up nicely. Now let's take a look at what happened intraday. I decided to get in here above the market on a stop order. Initial profit target up here, and a stop down below the low of the day, just in case I'm wrong. And I actually used an automated trailing stop. If you're going to day trade, I suggest you do what I call intraday position trade. Get in and try to hold on as long as you can. And through automated trailing stops, I can walk away from my screen knowing that I am protected. And through limit orders to take profits, I know that I'm able to automatically take those profits should the market move in my favor. So again, here are the actual trades down there. And then there's a trailing stop. And then I exited the remainder, market on close. And again, if you just email me, you can get these slides so you can see the details on these trades and go through them a little bit. Now here's the missed trade of the week. This is a stock that somebody brought up in the Facebook group. And it's a stock that I was also taking a look at, but decided to pass on. And here was your buy here. And it's just a breakout pattern that we trade in IPOs. And I'll get into these patterns in upcoming shows. And my thinking on this was that it just didn't seem like a real stock. Now, I know I'm confusing the issue with facts, but with IPOs, I will occasionally look at what the company does for a primary signal. If I'm taking a signal further down the road, then I will not worry so much about confusing the issue with facts. Okay, we're just about out of time, so I want to thank all you guys for being here. I'm going to follow up on this next year. Everybody have a happy holidays, and I'll see you early next year. Thank you so much.